Okay, so first thing I'd like to do is welcome everybody to the call. Today I have Choon from Hurst Partners, who are business brokers and consultants, and we're going to be talking about how sellable your business is. So I'd like to welcome Choon today. Welcome, Choon.
Thank you for that, for having me, David.
You're welcome. You're welcome. So really, this whole question of selling a business, I've been in the business coaching sort of area for many, many years now, and it's amazing how many people I meet that actually just say, I just want to get out of business. I just want to sell it. So when we had this conversation earlier, you mentioned that there's actually a methodology to understanding how much a business is worth. And I figured that it'd be very valuable for our listeners today to just understand a bit more about what's involved in getting a business either ready for sale or even understanding what the sale process of selling the business is. So can you run me through a few of the things that you'd like to cover today?
All right. I think it's interesting that you asked this question. As brokers and consultants, we see business owners every day, most of the time. And when they come to us, they thought, look, I want to sell. And they thought as if entering into a shop. Give me the business, put on the shelf. Someone will give them the money and they can walk away happy. In
Yeah.
real life, it's a lot more different than that.
So let's run through what are the sort of realities that the business owner has to deal with when it comes to actually valuing or selling their business.
Well, what we find in general, as you realize, most owners are fascinated and put their effort in trying to grow their business because that's their dream. They're trying to grow something that out of excitement or need.
Sure, sure.
But what happened, we find that at where we are, we tend to look at them when they come to us and say, look, I got a product, can you sell it for me?
Okay. Yep.
And we realize a lot of them hasn't put a lot of thoughts into what they're building.
Yeah, yeah. Because I suppose one of the issues I find as a business coach is people come to me because they want to start a business or they want to grow their business, and often the question is asked, well, what does it look like when it's finished? And Stephen Covey once said it: you must begin with an end in mind.
Exactly. I
Yeah,
totally agree on that.
excellent.
And if you look at that, in terms of exit, which is basically leaving the business, it's one of those things in life. So you start something and you're finished. And it's a matter of not what you choose, it can be chosen for you by default.
Right,
There's 100% certainty you must leave the business.
right. Okay, so really, what you're saying is the reality is that one day you're going to finish.
You have to finish,
Right,
unless we can live forever.
right. Okay.
You know?
So really, like the message I'm getting, and I suppose I've mentioned before, is to make sure that there is some way to exit the
Exactly.
business. Okay.
And if you look at the basic understanding of it, simple.
Yeah.
Either you get pushed
Yeah.
or you walk.
Okay.
You have a choice. And surprisingly, from the stats that we gather from our research, whether locally from Australia as well as from US, I think in fact, more than 50% of exits are actually not planned.
Right. Okay. So what happens?
Someone will come to us and say, look, a wife might call us, my husband got a heart attack.
Right.
And it's now he can't work. Can you help him to sell his business?
It's really out of desperation in that situation.
Or someone come to us for a partnership split.
Okay.
Say, look, can we sell the business?
Right. So it's really forced upon them.
Exactly. And a lot of them, we got owners in the 80s coming to us.
Yep.
Can you sell our business? It's too hard for me now to hang on.
Right. And in that situation, what's the chances of getting a good price?
Well, the markets will know about this.
Right.
And unfortunately for a lot of them, the question is not the price even. It's
Yep.
whether can they actually sell it? Can they find a buyer for it? Or can we find a buyer for them?
Right. So it's actually got nothing to do with price at that point. It's really just about finding someone who actually is even interested in buying the business at that point.
Well, exactly. A lot of businesses actually are not sellable.
They're not
surprisingly.
Okay.
Right.
Can you give us an example?
Look, there's businesses that a good one that we came across is a car mechanic that we know. In fact, this happened recently.
Yes.
Where he actually fell ill,
right.
But his business was set up around him.
Right.
He's the man.
Right.
So he's the expert.
He's the expert.
And the clients know him as the man. Mm-hmm. So the goodwill is in him.
Right. So the goodwill is stuck with the owner, and when the owner can't work anymore.
Exactly. And when you try to sell it, unfortunately, in this industry, the car mechanic, which is one of those trades-based business.
Yep.
Those who got a skill set will always have a job.
Yeah.
And those who want to buy a business hasn't got the money. They're too young.
Okay. Okay. So what you're talking about is in a high skill environment. If the business owner is also the technician or the person who works within the business, it's very hard to sell because they need to find another technician, but with money. With
money, and also if the other element is time, they need to give us the time to find a buyer. And we'll talk about this as we go through this conversation later today.
Sure.
All right, so that is basically the basis of factual information that we see all the time.
Yes.
And in fact, if you look at the websites out there where lots of businesses are listed for sale,
Yep.
our internal tracking of them says that about 10 to 20% of those listed are actually sold.
Only that little.
That's right.
Okay.
A lot of them are listed, but you can put as much as you like on it, put whatever you want on it. Doesn't mean that you'll find a buyer.
Right.
But that's the reality of the fact.
Yeah.
Okay, now what? So the rest of our discussion today, I'll talk about what are options,
Okay.
which
Right.
I think the owner should think about,
Mhm.
because at any time in life, you never know how you're going to get out.
So before we even start, let me ask you this: when should a person consider what they need to prepare to sell their business?
The day one when they start a business.
Right. So even from day one, when they're started and they're all excited and they think that they're bulletproof and they can build a business that conquers the world, they should already be thinking about selling.
Think about it, David.
Yeah.
The easiest comparison we have is like building a house.
Right.
When someone build a house, they got a plan, they got an approval, they got the engineers involved, they got the builders involved, they got the trades involved.
Yeah.
And they do know what they want to be like when it's finished.
Right.
Business one those funny animals. A
Yeah.
lot of business owners started with this energy that pushed them, they rushed to do
Yes.
something.
Yes.
And they're just like going out to a building or Bunnings maybe.
Yep.
Just buying all your materials. I bought the beams, I bought the metals, I bought the windows,
Mhm.
and you just put them all together, hoping you have something that looks good.
Right.
And unfortunately, most of the time, the market will tell the owners, say, look, what you have is not maybe not what we want.
Yeah.
So they end up in a situation that's not sellable.
Okay. So really, what's happening? What you're suggesting is that people are going about building their business for the wrong reason.
Whatever reason, there's never a wrong reason, but it's
Okay.
always going to be very clear what is your end objective in mind when you walk
Right.
away.
Right. So I suppose most people's end objective is just to make money, as opposed to how can I walk away from this when I'm ready to.
Oh, exactly. Most people who,
Right.
if they have that even as a slightest thought in the start,
Yeah.
it will help them a lot in the process of not being actually going down the track trying to sell the business, because selling the business process can be very, really taxing on the owner.
Yeah. Yeah. I know even in Michael Gerber's book, The E-Myth, he talks about how will it look when it's finished.
Exactly.
And most people are puzzled by what that means. They go, "What do you mean finished? I want to work in my business." And he's of the same opinion. A business is finished when it can work without you, and when it can work without you, it's more valuable.
Yes, we can talk about that as we go down. In fact, that will be ideal. In real life,
Yeah.
As brokers over the last 8 years,
Yeah.
I would say most businesses that come to us are not perfect.
Right.
In fact, there's no perfect business we have seen so far, or else I would have tried to buy them.
Fair call. Fair call. So let's talk about this. So what every business owner wants to know about exiting. Let's go through some of these bullet points.
All right. In general, right, we start with what are the options? What are the choices?
Yep.
We have.
Yep.
So in a way, in a nutshell, we work out on a whiteboard one day when we were over drinks.
Yeah.
There's about 27 ways of getting out.
27.
27.
I hope we're not going to go through them all
No,
today.
we're not going to go through all today. But the main one you'll find is that you actually end up selling, right?
Yeah.
Selling to someone that you know,
Yes.
or selling to someone that you don't know.
Right. So selling
Right.
a business is the first option.
And out of that, you also can look at strategies of looking at a business as a cash flow box, as a cash box. That is,
Okay.
we're not thinking of selling at all. Let's run it as a cash box.
Okay. So instead of selling it, we can just keep it as an investment.
That's it. That's it. Just like you put the money in the bank.
Mhm.
And for some owners, which are fortunate enough to have a very good quality setup that they have in their business,
Yeah.
it could be a viable option.
Okay.
So because selling it might not be the best return for the money they have for their assets.
Yep. Yep.
And then obviously the last one is just close the business and walk away.
Okay.
Which
Okay.
we find currently quite a fair bit of businesses, especially in retail, in a shopping area, especially in shopping centers and all these places where they have huge rent and huge overhead.
Yeah.
And when the time comes to renew the lease, they just throw the key and walk away from it.
Okay, so there's really no intrinsic value in the business at that point.
Unfortunately, in this cycle, at this time.
Right. Okay. Okay, so they're the general options. Okay, so let's switch to the next topic, which is really how do we value a business? What's a business worth? That's probably the $1 million question, isn't it?
It is always the first question. And normally someone calls us up over the phone or see us face to face.
Yeah.
Within the first couple of minutes, a lot of them want to jump to read our minds. Say, can you tell me what do I really get for my business?
Yeah, because I'm sure most of our listeners are actually asking that question right now.
Exactly. And as brokers, I'm gonna talk about it afterwards. But in general, if we find that the typical methods out there.
Yeah.
There's a couple of methods out there people understand.
Right.
It might not be right. I'm not saying they're right, but they
Mm.
understand and they've been used
Okay.
rightly or wrongly.
So let's talk about some of that.
One of the easiest one is to understand profit multiples.
Okay. So,
People will say your business is worth
Mhm.
X number of times of profit.
Right.
And that
Okay.
could be a 1 year's profit or profit or for you as a wages, doesn't matter. But someone
Yeah.
will use that as a multiple. It's always a multiple of something.
Yeah.
Profit.
Multiple of profit.
Another element that we can look at the pricing component is what is the return on investment if you want to buy a business.
Right.
Right. From buyer's perspective, they got this pile of money.
Mhm.
Because bear in mind, you as an owner hasn't got choice. You're
Yes.
stuck in there.
Right.
A buyer has a choice. They are
Right.
looking for outside in.
Yep. So they're looking at it saying, well, if I put in X amount of dollars, how much do I get as a return?
Exactly. Am I going to get a better return than working for someone else or,
Sure.
or getting from the bank?
Right.
Because the bank's the safest return you get.
Mhm.
Deposit. Right?
Yep.
So if you're trying to get a price that's way below bank deposit return, you can pray real hard and hopefully there's someone out there who will do it. But in general, most logical person will say, hold on first, why am I doing this?
Yeah. So why wouldn't I just keep my money in the bank as opposed to investing in this business?
Exactly. And in
Mhm.
some industry, there's actually called rule of thumb.
Right.
Example, like I sell a lot of accounting practice.
Yeah.
Most small accounting practice are not actually valued based on profit.
Okay. How are they
Given
valued?
given the accountants, they don't do that. They do value them based upon dollars per fee, cents per dollar of the fees they have generated.
Right. Right. Okay. So for some standard businesses, there's a formula that we could look at the number of fees generated, and I suppose that would be accurate in an industry where there's a lot of commonality in the kind of work that's being done. But the one I hear of the most is the profit multiple.
Yes, profit multiple has been widely been used, and we can go a bit more details after this.
Great.
Let's have a look. Obviously, it's very much simple to understand.
Yeah.
The thing I like to highlight is what is a profit?
Yep, it's a good question.
What is profit? Because everybody say my business is profitable. So what is a profit?
Yeah.
Bear in mind, if you speak to your accountants on your so-called yearly visit to get a tax return type of situation for the company,
Yeah.
Your purpose is always to reduce the profit.
Right. It's true. So often when we're looking at a business, if we look at the profit, after the accountant's worked on it, it's zero.
Well, we try to, right? Isn't it?
Yeah,
It's
exactly.
funny. I mean, and then we say, wow, is the business really profitable? So there's always a bit of digging around with the numbers.
Yeah.
To work out what's the real profit for the business.
Mm-hmm.
And again, there's confusion there in the industry because there's what we call EBIT, which is your profit.
So EBIT, for those people who haven't heard that before, it's earnings before interest and tax.
Exactly, which is what most of us will see in our financial statements.
Sure.
And even for listed company, pretty standard.
Yeah.
The next one, which is less used and less common, but it's actually been, typically used in all small business, is pivot.
Yeah, PBIT.
Yeah, pivot, which is proprietor's profit.
Okay, so can you explain that a bit more?
So what it does is, as the owner of a business,
yeah,
the benefit of the business brings you financially.
Right.
Is what we call pivot.
PBIT. So the difference between EBIT and PBIT?
Typically is whether do you pay yourself before or after the wages, after the profit has been counted.
That's pretty significant, isn't it?
It makes huge difference. A business that makes a PBIT of let's say $200,000 for the owner. That means owners every year tends to make $200,000 a year.
Right.
Walk away, including his holidays he paid for himself through the company, whatever his travel, his vehicles he used.
Yeah.
That could be his financial benefit to him, where the business brought him every year.
Okay.
Right. But if you convert the EBIT, which is you convert the profit after paying himself or replacement with him through a manager.
Right, much lower.
You end up with profit most likely about 100,000.
Yeah, because I suppose it is interesting when a lot of people look at this profit multiple, and they'll say we earned 100,000 in profit last year. And my very next question is always, great. So how much did you pay yourself first?
Exactly.
And they look at me puzzled and say, "What? No, I own the business."
Yeah.
And so, and it's interesting you said 100,000 because sometimes if you look at how hard the business owner works, it's usually the equivalent of 2 or 3 full-time employees.
Exactly, and then we'll talk about it afterwards, where some owners try to outsmart the system, so-called, by working. There's an example we know of owners, reducing their employee number.
Right.
Just before the last 12 months of selling.
Okay.
So they do more work. Instead of doing their typical 40 hours, they try to work 80 hours a week.
Right, just to increase this this EBIT or even
just increase
PBIT.
profit, yeah.
Yeah.
But again, one thing about amazing or what we are in now, where information are freely available over the net.
Yeah.
A lot of buyers are getting quite smart.
Right.
They're starting to ask the right question. What profit are we looking at?
Okay. Okay. So really, this whole profit multiple, as long as you ask the right questions, it can be fairly accurate. But with it being naive, people can look at a business saying it's highly profitable when actually it's a really poorly paid job.
And not just that, when someone says, I sold a business for 3 times, what is 3 times of what? Is it 3 times of pivot or 3 times of EBIT? It makes a huge difference. All right, let's move on. Just a bit of for those who are just curious to know about how the accountants do it, because this is the most common way accountants will go about getting a number, so-called value of a business.
Okay.
Is they look at what the EBIT is and times the multiple.
Right.
And typically a 3 times EBIT, we convert to return on investment is about 33%.
Right. Okay.
So it's quite equivalent. 3 years of return before tax.
Yes.
It's about 33% ROI.
ROI. Okay. Interesting.
And so a profit of $200,000, let's say.
Yeah.
Using 3 times, simple.
Yep.
600.
Yep. So the business is valued at $600 if it's got a EBIT, not a PBIT, of 200,000.
And 3 times being the one being applied to the industry, on average. All right.
Okay.
But again, there's a lot more working behind the numbers, because one thing that you look at a business is there goodwill in the business?
Okay.
Because if there's no goodwill, it means that you can sell your assets.
Right.
And not having to go in any selling of the business itself, which is quite common.
Right. Okay. So really, sometimes a business is just worth whatever the equipment is.
Yep. And typically, we find that quite common in industry where there's a lot of heavy investment in assets, like manufacturing.
Yes.
Where there's high percentage of asset base in the price, and a small little element of goodwill.
Right. So really, in a business that has high cost of assets, generally speaking, the goodwill is going to be much smaller.
Much smaller. And the traditional manufacturing is a very good example.
Yep.
And the reverse is true too. Nowadays, the modern businesses where incorporate lots of intellectual property.
Yes.
Like online business.
Yes.
Consulting like yourself.
Mm-hmm.
You don't have a lot of asset base in a business.
No.
Which is tangible.
Right. Okay.
Most of the value of the business actually is a goodwill.
Yes. So talking about goodwill, are we going to talk a bit about how that's established or calculated? Well,
a lot of people say, look, goodwill can be calculated. Our approach is to look at it not as an initial number, but more as a result.
Okay.
Because once you determine what the market will going to pay for you in price for the business,
yes,
and you know the asset you have invested in the business, you're just forcing out the goodwill.
Right. Okay. So the goodwill is actually the leftover.
It's typically a leftover, and that also shows how good your quality of the business you have.
Ah, okay, I understand.
Right, and a lot of people do the other way around, because what they do is they say, I want a goodwill of 500,000.
Right.
Because I think it's worth that much.
Right, which is totally personal opinion.
Which is, we'll talk about that, but it's not as if it's right or wrong, but you can have that assumption to start with.
Yeah, and a wise man once said, opinions are like armpits. Everyone has them and most of them stink, right? Excellent.
So let's talk about misconception. We'll run a few and see. I'm sure that there's a lot more, but these are the few that we come across quite often.
Sure.
The first assumption is you're assuming someone's going to buy your business. There's a demand for it.
Yeah.
Like I said before, if you look at the market today in Australia, in the market we're in, there's some businesses that are huge demand.
Yes.
And some there's actually not much demand, even though they are very profitable.
Okay. So can you give us a couple of examples?
A very good example again. Come back to currently in the accounting practice.
Yeah.
It's a huge demand. There's a lot more demand than supply out there.
Right. Okay.
So the price perception wise and the actual price being realized is a lot higher from the market itself.
Yep. Yep.
Compared to traditional value that it tends to stick on.
Okay, as opposed to retail, I suppose, which you mentioned before.
Yes, the retail in shopping centers is one of those areas that is maybe a challenge, I would say.
Yes.
The other one would be manufacturing, general manufacturing with a competition from import.
Right.
So first thing is there a demand for the business? Not really. Sometimes there might not be any demand, right. And therefore that will impact on the price and the time it takes to sell it, yep. Or to find a buyer for it.
Yep. Okay.
There's always the usual thing as a market transaction, buyer-seller expectation.
Yes.
You think that you want the cash and you give over the key.
Yeah.
Buyers will think that they wanted the business, the key, but they hold the cash back just in case the business doesn't work.
Yes, because I've heard there's a lot of nightmare stories, right? where people are selling a business and the books look very impressive,
Exactly.
and the owner's hoping that the seller will buy, and then they run.
Yep. So again, this is one of those evolution over time now. There's a lot more towards vendor finance, a lot more transparency now that we're seeing in the marketplace.
Yes.
Because traditionally, just most owners will say, "Look, trust me, we're all right.
Yeah.
Look at what I have my lifestyle for the last 10 years or 20 years.
Yeah.
The business has given me all this, so you can buy over this thing. Trust me, it's there."
Yep.
We find that element of trust is slowly disappearing.
So it's more like put your money where your mouth is now, huh?
Yeah, we're going to prove the business.
Prove the business, or offer some sort of vendor finance.
Some sort of vendor finance or some sort of systems and a contractual agreement to actually ensure that what you deliver is what you promise.
So there's a transition period.
Exactly.
Okay. Good.
And the time to sell is interesting. We'll talk about it a bit afterwards, because there's always questions someone asks, well, is it the right time to sell?
Yep.
We'll talk about it afterwards.
Okay, so really timing is a critical aspect.
It's a critical, like I say, some industries in demand.
Mm-hmm.
It doesn't mean it's in demand next year.
Yep.
It just happened to be in demand today.
Yep.
And what's in demand before might not be in demand today.
Okay.
So that's how the market actually works.
Yep.
It takes time to find a buyer, funny enough.
Right. Yeah, so you mean there's not 100 million people waiting to buy business today?
If you look at the stats that we are seeing out there, in general, I mean, because you don't operate in certain industry, there's a lot of ready buyer.
Yes.
Example, like your cafe and the restaurants, because it's people trading them in and out all the time.
Right, so they just keep changing hands.
Because those businesses are quite demanding in terms of time-wise for the owner.
Yes.
And a lot of them don't take leave off the business. They took leave by selling the business.
Right. Okay, so with those smaller businesses, the only way to get a break is to actually sell it.
Yeah.
So the turnover is high.
High, yeah. Where else? And also a lot of them are bought by people who are, let's say, less experienced.
Right.
And the sellers are more experienced.
Okay.
Where in the professional service area, which we tend to do a lot more, we find that the time to find a buyer is a skill set. You're going to match the skill set and the value of the buyer to the seller.
Okay, so the values
such as the culture of the place.
Right.
Because you're buying over intellectual property, buying intangible.
Right. Okay, so really there has to be not a shock to the system when there's a transition of ownership.
Exactly. And that also need to factor in the transition time, exactly like what you mentioned. Because typical example, someone would thought, I'll come in, I give you the money, I'll collect the money, I give the key over, and I can go on my cruise ship holiday. In general, it could take up to 12 months to 2 years before that happens, even though you're going to buy it today for him.
So really this whole idea that people think one day I'm just going to get out of this business and sell it is just a myth.
Oh, it's not a myth. It can happen.
Yeah.
But it's still happening.
Yes.
It's just if you base on that as an assumption to start the first step of the journey of selling, you'll be largely disappointed, because obviously, as it's easy to sell an idea that you can take the money and go on your and run so called. But as licensed brokers and experienced brokers in the industry, we tell them our clients be prepared for it.
Right.
So if they're more prepared, at least we know the business won't be run down.
Sure.
It's one of the risks that they'll take.
Okay. So really, like you mentioned here, also retirement depends on cashing out, because I do hear this a lot where people are in business and they say, "This is my retirement nest egg, and I'll just work till I can't work anymore, and by that time it'll have a value, and that will be my retirement."
Well, as you gather from now, our view is that the business should not be seen as a nest egg. It's an asset. We totally agree.
Right.
But it fluctuates in price.
Yep.
It depends on supply and demand, and also depend on how your business perform in any one time.
Yep.
So there's nothing called egg related to it. It's not as if you can see the thing. I got 5 today, I got 10 tomorrow. It doesn't. You can't count the thing.
Right. So it's such a volatile number that to rely on that for your retirement is a very dangerous thing.
I myself wouldn't advise on that.
Right.
Because if you do that, a lot of time you'll be disappointed because you're building your hope on something else and not on something that you can actually control.
Right. Understand.
All right. Let's look at timing. Timing is an interesting one. I got about an example of a tree graph here, right?
Yeah.
Where typically it shows the trending of either a profit or revenue.
Okay.
Most owners come to us, especially in this environment over the last 3 years. A lot of them actually gone through a bit of challenging time.
Right.
And they will say, "Look, I'm tired, but my business has huge potential. It should perform better than what it is."
Yes.
Look at the curve. Don't worry about it. Even though it's going downwards, it's still okay because it's just me. It's not my business. It's me.
Okay. So I'm tired, and that's why the business isn't doing well.
Exactly, and that's quite a common reason we hear from a lot of business owners, which is true, because
Yeah.
it's actually not an easy environment, as you realize out there at this
Yes.
stage.
Yes.
And most owners thought if someone more energetic come in,
Yeah.
they will be able to perform a lot better.
Yeah.
Unfortunately, like I said before, a bar is looking for outside in.
Right. So when they see a business that's actually going downhill, and the owner's saying it's because I'm tired,
yes,
they've both got two totally different perspectives.
There's very different perspective. And
Right.
imagine we talk about the multiples. You talk about profit multiples,
Yeah.
and you talk about the profit itself. You have one end the profit declining.
Right.
At the same time, the perception of the business is not too good too, because what's going on with this business?
Yeah. Yeah.
Not just the profits going downwards, but is there any structural issue?
Okay, so really, when profits declining, and for whatever reason, the outsider looking in is saying this business is on the way out.
So how do you think it's going to be received in the marketplace by a potential buyer?
Yeah.
So that will be a challenge. So it's not as if you got this nest egg or thing you can sell straight away, because by looking at it, the graph, people can say, hold on first. Even if what you say is true, for let's say health reason, they can see that you are not feeling that well, and obviously not putting the full effort in. The typical answer from buyer is, I can see potentially I can turn it around.
Yep.
But if I do turn it around and change the direction of the profit or the revenue, that's my effort.
Yes.
It's my expertise.
Right. So they're not paying for that. They're not paying for potential. They're paying for what actually exists right now.
They will say, well, if I can turn it around, that's my skill set and that's my input.
That's right.
Why should I be paying for my input and my skill set?
Yeah. Very good point.
Very hard to argue against that.
100% right.
But on a positive note, if you do have a business that's actually growing on the trend currently, we are still finding that they're getting a very good price. We just did recently a transaction, and the price multiples we believe is even before GFC was a really good. So again, that business has a very nice trend, like we see on a growing trend, and there's potential being demonstrated, and the buyers are paying for that by reflecting in the multiples.
Right. Okay. So really, if a business is growing, regardless of the economy, it's always going to get a higher multiple.
There's always a demand for good quality business.
Sure.
Because there's a lot of buy out there. There's not. I mean, we are seeing that there's a lot of buy out there looking to buy.
Yep.
And the biggest complaint they have is, where are the quality businesses?
Of course.
Because they're saying they want to invest in something they can believe in.
Yep. So they don't want all these things that are going broke.
No, because they have a choice. They're sitting outside looking in, and why should they?
Why should I buy someone else's headaches?
Exactly.
Yeah.
Now let's look at how. So what can we do as a business owner?
Yep.
Given that we all this basic information that we discussed.
Yes.
I think there's a first thing we always tell them is, it is your choice.
Mm-hmm.
You gotta know what you want. Okay. Not what your accountant want, what your family want, or what anyone else want, but you as the owner of a business must know what you want out of it.
Okay.
Because we can't solve the one problem for yourself. It's a personal issue.
So it still comes back to that begin with an end in mind, but even the personal end.
Yeah.
So what is the owner's personal goal?
Exactly. What do you want to get out of this?
Sure.
And then you can start to look at how sellable your business is, because that should be the first thing in your mind before you even think of getting out.
Maybe even before you get in.
Well, that would be very nice if everybody does that.
Yeah.
But I'm actually, as you realize, we go into business for all sorts of reasons.
Yeah. And most people don't see that path. So really, making sure that you are clear on what you're trying to achieve, what your personal goal is.
Exactly. And then you can see how ready are you to get out.
Yeah.
All right. And obviously, if you are ready and you have all the things aligned properly, then you should be able to look at the value through yourself and through the advice and through working on the business.
Sure. Because this is pretty much what we talk to business owners about all the time, and say, if you do want to sell your business in the future, you should be building a business to sell, which means let's start looking at the value of the goodwill. Let's start looking at how to make it more attractive.
Exactly.
Make sure that it doesn't rely on the business owner or a high-level skill set where possible. So anything you can do in your plan to build in this exit is actually going to make sure that you've got a better chance of getting a good success.
Well, a better quality business that you can enjoy is also a business that someone else wants.
Yeah, this reminds me of a story. A friend of mine, and I don't know if you've seen this before, when people go to sell their house, and just before they sell it, they finish off those renovations they never finished, and they get the garden done, and they just do the last bit of painting, and they do all these last finishing touches. And all of a sudden, this house that they were going to sell all of a sudden looks good again.
Exactly.
And they go, oh, now that it looks nice, maybe we should just keep the whole thing. So even if they're not going to sell their business, going through this process will actually improve the business for them to stay with anyway.
Exactly. And
Mm.
that's why for us, we won't believe that there's options for them not to sell.
Right.
If they can't find a buyer or for whatever reason to fit their circumstances,
Yes.
we are happy to recommend them that one of the option they should consider is not selling.
Yep.
Because cashing out is not a bad strategy for certain people in certain circumstances.
Right.
Now, the other thing is to look at, as we discussed, we've been talking about before,
Yep.
how do you end up in the value, in the price?
Yeah. So how do we do that?
It's very simple, isn't it? There's only two variables you are playing with, a profit and a multiple.
Yep.
How hard can that be?
Well, sounds easy when you put it that way, but I mean, profits are one we work on. Whenever I talk to someone in business, the number one measure of success from a coaching
Yep.
perspective is profit.
Yep.
Because the numbers don't lie. Right?
Exactly.
The P&L tells me the truth, except for the one that the accountants massage to
Yep.
optimize your tax position. But the raw numbers tell us what the profitability is, which tells us the health of the business.
Yep.
Let's talk about multiples.
The thing about multiples, in fact, it can be related to the industry that you're in.
Yep.
And it also relates to the risk factor for the business.
So how do we increase the multiple on a business? Like you've said, it depends the industry we're in, but most people already have the business.
Yep.
So what sort of things can we do to increase that multiple?
Typically, there's a couple of things that we objectively look at.
Yep.
It all relate to risk.
Yep.
The more risky the business is,
Mm.
or the more risky the income from the profit, or the impact on the profit.
Yep. So give me some examples.
A good example would be all right. I give you one where I can see as a wholesale distribution business.
Right.
All right. A business with a huge, good customer base,
Yep.
Australia-wide.
Mm-hmm.
In fact, let's make it two of them, exactly a similar sort of business.
Okay.
One of them has established itself with a good database,
Right.
a good agency agreement with overseas suppliers,
Mm-hmm.
which guarantees that there's no direct import allowed.
Right.
Or at least they try to avoid that.
So contracts
in place.
Yes.
And if a team of salespeople, well structured, well remunerated,
Yep.
working for them happily.
Yep.
Compared to another one, which is basically rushing around doing the deals at the back, offloading the trucks. The owners are there working 7 days a week.
Right. Okay.
And not having any contract in place from suppliers.
Right. Okay. So even though they make the same profit, one of them does it systematically through a series of contracts and matured arrangements with their salespeople. The multiple goes up.
And also the first one might be the owner doesn't need to be there 5 days, even 5 days can just appear for in the morning, in the afternoon.
Okay, so the other thing is obviously the dependency on a highly skilled person to be available.
That's right. And the easiest business to sell when the multiples are high is obviously one they can deliver like a box. You can give it to a buyer and say, this is the box, take it over.
Yep.
The next day you open the box again, the money was still coming out.
Right.
Nothing's been impacted. That would be the one that we do it every day. It's what we call listed shares.
Yeah.
Right.
Okay, so that's an interesting distinction. So really, if you looked at the business to say, so the way to improve multiples is to have a robust system, make sure that there's no risk points within the business. So one of the things,
well, can minimize the risk. We can't remove all the risk. We got to minimize it.
Yeah.
I mean, key man risk is one of the key things that you always look at.
Yeah. So key man risk. So the thing I often say to people is the number one is the most dangerous number in any business. So one person who can do a specific job, one supplier, one customer, one product. So one of the ways to reduce risks is to make sure that there's no one point of failure within the business.
Exactly. Exactly. That helps.
Okay, great.
And that's one good example. But again, we'll talk about it afterwards. So there's a couple of systematic ways we've gone about looking at that.
Yeah.
And it really gives you a very objective view. Not our view, but objective evaluation versus what others think.
Okay.
There's not much point me think because I'm not the one who pay you the money for the business.
Right.
I'm going to find a buyer. We communicate them to the value of your business, and for them to pay them to take over.
Right.
Okay. Now the other thing is that you look at the price multiple itself. Supply and demand we covered before. There's always supply and demand driven underneath multiple itself.
Okay.
This is I'll try to find some magic equation that to give a magic answer to what I think I'm after, but in the end of it, I give up. So this is one of the best I can come up with.
So the misconceptions are
business value is not price.
Right.
Right. Typically, what we find when we deal with accountants and ourselves, even as a valuer, because I'm a qualified valuer, we do conduct business valuation work itself.
Okay.
You find the valuation itself is a number that we pinned in a point in time.
Okay.
Price is what you get as the market evolves.
Right.
So the value you have today
Yep.
inherently might be a lot higher than what the price is today.
Right. Okay. So the price and the value are not necessarily the same.
Now, a lot of us think value and price is the same thing. I agree as a valuer, yes, in that point in time, when we do the valuation,
yes,
using the information we have at that time.
Right.
12 months later, you take the same numbers out and try to compare that to the what is this in the marketplace, it will change.
Okay.
So price and time is actually different. It's a bit like stock market. Does
Right.
BHP value changes every day?
Yes. No. Not
No.
the overall value.
Not the overall intrinsic value.
No. The price.
The price changes, but the stock changes.
That's market sentiment.
Market sentiment, right? Now, a lot of time people come to us and say, look, I want to sell at this price.
Yeah.
And how do you derive at that?
Yeah.
Very simple. I need this amount of dollars to pay off things, or I need this to retire. There's a next egg thing that will come back again.
Yeah.
And unfortunately, the market doesn't work like a bank.
Right.
Or a fridge. As a better example, when you're hungry, you go to the fridge, you open up, the food is there for you to pick it up.
Yep.
So the price might not equal to your need.
Yeah. I understand that one.
And the same thing too, price is not really actually what you ask the buyer to pay.
Okay.
All right? Because the buyers will only pay what they want to pay.
Right. Okay. Interesting.
So in general, if you look at the word definition of, we always define as market price is the willingness to accept for buying for the sellers.
From the buyer's point of view,
yeah. And the buyer's willingness to pay.
Right.
I in fact challenge that a little bit and say, look, it's not just buyer's willingness to pay.
Yeah.
It's the buyer's willingness and ability to pay.
Okay.
Ability is a lot more important in this cycle now.
Okay.
Than just willingness.
So what is that like? Explain the difference between willingness.
There is a difference.
Yeah.
Someone might come along and say, I like this business, fantastic. How much do you want for it? Let's put a round number, $1 million, the magic number everybody's wish for.
Yeah.
And the guy said, I love this business. I think $1 million is a fair price. I'm willing to buy this business.
No.
Unfortunately, the bank might have other ideas about whether can he afford to pay for the business.
Right. Okay. So willingness is really just the person's want or desire, and ability comes down to financing. As
brokers, we dealt in the reality of ability.
Right.
Because we can get lots of willing buyer.
Yeah. But the deal's not done until the money's in the bank.
We always wait for the money to be in the bank because they don't hand over the keys.
I understand.
Okay, so
excellent.
What to take away? Obviously, we talk about this is a very, very standard thing for small business operators and a trap that everybody falls into.
Absolutely. The first one that you said is business owners don't plan to fail. Well,
not
many.
Not many.
But we just had a planning day for our clients yesterday, and this comes up right at the front of us, right at the start. We say, look, the failure to have a plan is really the biggest challenge most people have. They know they need one, but they never do it. So having a plan is compulsory because it's funny, you cannot build a house without an approved plan.
Exactly.
And you need to follow the plan to the millimeter.
Exactly.
But you can build a business with no plan.
Yep, exactly. You build something and you can get all your ingredients in there with no plans.
Yeah.
Amazing. And the certainty that you're going to get out.
Right.
Don't think that, I'm not selling today. I would be doing it maybe in 10 years' time when I'm ready.
Yeah.
Unfortunately, we've seen a lot in our role as brokers,
Yeah.
where people call us up or through accountants as calling us up for their clients.
Yeah.
There's certainty of getting out, yes, but you have to be prepared.
Right. Which is a really interesting point because I think that it would be a fair comment to make to any person, how much is your business worth? Because I think every business is for sale today.
Every business is for sale at the right price, I'm sure.
That's right. So the question is only how much?
How much?
Right.
How much? All right, let's go back to the key thing that we might look at is how sellable is your business?
Sure.
Right, come back to the fundamental question. If it's not sellable, it's not much point thinking it's worth this much.
Yep. So let's talk about this sellability or this whole idea of being sellable.
Yeah, I live in sellable. Look, to us, I think it's about three elements.
Yep.
As part of the option evaluation.
Right? Yep.
Most owners or most of us talk about selling as a price.
Yes.
What's the price that you want? What's the price that you're expecting? What sort of money do you want for it?
Right.
What we find a lot of times is actually a lot more than that.
Yeah.
In terms of as an owner getting out.
Mm-hmm.
There's the first emotional attachment to the business. Most business owners who started their business.
Yeah, they love it.
They love it.
Like their first child.
What are they going to do without that? How dare you go and do this to my business?
Yeah.
Imagine what the buyers will do to the business. Oh no, you can't do that. So there's emotional element in there.
Yeah.
If the owner cannot address that as part of the process,
Yes.
the selling process could be very hard.
Yes. Because I know even though people say, I just want out of here, the reality is that the emotional detachment is not, it doesn't exist yet.
Yeah.
As soon as it becomes reality, all of a sudden they'll discount a sale just based on they don't think that person will do justice to their business.
For whatever reason. But a lot of times it's actually, we find it's actually not the money.
Yeah.
It's actually emotional.
Yes.
So they're going to get that out of the way.
100%.
And then the financial is easy.
Okay.
We just got to accept that how the market works,
Yep.
and how you plan yourself to get to where you want to go to be.
Right.
And there's where accountants play a big role, financial planners play a big role.
Yep.
And if it's done rightly, you will help our job a lot easier.
Okay. So really having the finances up to date.
Up to date, and also knowing where the owners are very clear where they need to be.
Yeah.
Because our job is we deliver the best from the marketplace.
Sure. And really, like what you just spoken about today, is that the price is set by the market.
The price of the market, there is a range in variation as a broker. I must admit,
Yeah.
that's where skills counts.
Yes.
Ability to negotiate, ability to actually read the buyer.
Yeah.
And find a need for the buyer to establish a good price, a better price, an
Yep.
outcome for the owner.
Yep.
Last one is relationships. It's not just emotional, or not just financials. Typically in a business,
Yep.
owners establish a lot of relationship.
Right. So with the employees,
a lot of whole identity itself beyond emotion. They see their friends in there.
Right.
They see everything's all tied to that. I mean, so and so has been with me for 20 years. What's going to happen to him after I go?
Yeah. Yep.
Right?
Yep.
You attach yourself to the business emotionally, but you have to also attach the relationship to the people you have.
Understand.
The suppliers who you travel every year to go and meet.
Yep. And they've been paying all of the overseas trips.
Exactly.
Of course, we've got a good relationship with those guys.
So that's a big part. If they can't address that as clearly as they have,
Yep.
as a starting point,
right,
they're not ready to get out.
Okay.
And that's why it could be why a process takes a fair bit of time, 6 to 12 months to get out.
Yep.
Now back to this sellable business. We've done a fair bit of work over the years, and we realize that it's always a challenge.
Yes.
We have limited resources and time,
Mm-hmm.
but always a lot of demand on us, because we are among the few professions in the marketplace who actually not just understand how the transaction happened,
Right.
or answer the question, what is the price of the business?
Yes.
But also able to provide the insight of how to let them know what is coming.
Yep.
Because transaction process itself can be quite complex.
Right.
Whereas the legal part of it could be handled by the legal profession.
Yeah.
Like I said before, because there's a lot of element involved. There's emotional, there's financial, there's a relationship.
Yep.
We have to actually establish a lot of this groundwork at the back,
right,
before we can have a happy outcome at the end.
Yep. Okay, I understand.
So to make the job simple, we actually go around, and that's where the sellability score comes in.
Right.
Where we believe it's a very efficient tool.
Yep.
Where a business owner can do it anytime they want, just to get an objective look of where they are.
Right. So this whole notion of the sellability score, where does this come from?
Well, it's basically John was the author of the book Build to Sell.
Yes.
He's built his business and sell at a good price.
Yes.
And he understands the whole process. And
right.
through that, he wrote a book.
Yes, that's John Warrillow. Built to Sell.
Built to Sell. Yeah,
yep.
That's the book itself.
Fantastic book. I've read that one.
It's a good book.
Yeah.
But as an owner, if you're too busy, you don't have to read the book.
Yeah.
He's actually captured his concept of a sellable business into this software tools platform that he has.
Oh, great.
And we have made arrangement with him.
Yep.
To secure the tools so that we can use it for our clients and people that come to us.
Okay.
To prepare them so that they are well informed. In a way, it helps us.
Yep.
As well as helping our clients.
So this sellability report.
Yeah.
Tell us a bit about what's involved.
Well, if you look at the sellability report, it's actually quite a nice report, comprehensive enough, over 27 pages.
Yeah.
What it does, it actually covers. Started from a question. It's a very simple questionnaire that you're going to do.
Yep.
Which you can do it over 15 minutes average.
So 15 minutes.
15 minutes average. Yeah.
Yep.
Not a lot of sensitive questions, because we're not going to establish the value at the time.
Right.
We just determine whether it's a business sellable.
Sellable. Okay.
That's the most important.
Of course.
Right. The valuation component, we can add that locally.
Right.
Because in every state is different, every industry is different.
Yeah.
That's where our expertise comes in to complement the score that you get.
Okay.
Because we can explain that further. All right.
Excellent.
So once we got that, the report itself will give a number.
Right.
Simple. And every all of us understand numbers,
Just
1
one
to
number.
100. Yeah.
Okay.
And from that numbers, there's actually a lot more details going behind to work
Sure.
out the numbers. And
Okay.
this covers key eight areas.
Yep.
You evaluate your business based on financial performance,
Yes.
the growth potential we
Sure.
like,
Yep.
the structure of the business. How easy is it to generate revenue? Is it with you or without you?
That's the Switzerland structure.
Yeah.
Okay.
And you look at the valuation seesaw. Does your business fluctuates in
Yep.
terms of revenue
Okay.
and profit?
Yep.
Right. How reliable is this revenue? I mean, a revenue that's secured by contract
Yes.
or revenue that's secured by one big job.
Right. Okay. So this is the risk that we talked about
All
before.
right. And what sort of control have you got over the business? Well, as a buyer, as
Yeah.
an operator of the business itself.
Okay.
The customers, are they happy?
Well, that's pretty important.
Oh, not really. You can build a business with unhappy customers.
Okay.
You can. I'm sure you've seen it.
I suppose the tax department is a business with unhappy customers, isn't it?
It is. And hub and spoke, how the business has been structured to operate, whether is it centralized or decentralized, how you actually operate. And there's a lot more details. And the report itself covers and explains a lot more detail than what I'm saying in this short time I have.
Yes.
But it's something worthwhile to read through to spark the thinking here.
Yeah. Fantastic.
Right? This is basically a dashboard. As part of the report, you get a dashboard.
Okay.
So they will compare you versus the average industry.
Yeah.
Numbers you get. So it's actually not a bad objective look at yourself.
Okay, so it's actually going to now look at my business after I start answering these questions
Yes.
in relation to other businesses like mine.
Quite similar.
Okay.
Right? Obviously, we would say it's not 100% accurate, but as an opinion start, objective start, first step.
Well, it's a baseline, right?
Oh, the thing about small businesses out there in Australia,
Yeah.
there's very limited information out there.
Yep.
On most of them, in terms of how they perform, what's the right benchmark.
Yes.
Right? We all try to get benchmark. I'm sure you do.
Yes, very difficult.
Very difficult. Your friends who play golf with you, John who did last week, who told you he sold his business for 5 times multiple, whatever he is.
Yep.
What is that? Has he got all his money yet? Maybe not.
Yeah.
He's not going to tell you that. And same as a competitor. What's the average gross margin? We think we're all buying the same price at the same cost.
Yeah, so
they might not be. We actually won't know. So this will provide a very objective start. And that's what we like. Make an objective decision in the start.
Yep.
So you are well informed.
Okay.
To make the next step.
So really just understanding how to compare myself to the market, where the holes are within my structure at the moment. So what I need to work on to actually build that score.
And that's where you help some of your clients who look at it and say, all right, this is the things I can work on, because it doesn't really give you a specific prescription. Yep. It's not prescriptive, but it's diagnostic. They actually tell you these are the areas you can look at. Okay. And as owners, you got well aware. You can decide, fine, I'm happy to live with that.
Yep.
Or no, I better fix it.
Fantastic.
And have a plan in place. If you look at what we find, the sellability score now provides an answer in a way, a hint to you as an owner.
Yeah.
Not from a broker or from your accountant or yourself or anyone that you know. Yeah. But something that's objective to start with, because it's not a value question. It's whether can I sell the business? Is there a demand for it? And once you answer that question, you actually know quite well.
Yep.
Because that will lead to a business that's sellable. Generally, is a business in demand.
Okay, so really, I suppose what we're trying to do here is make sure people understand it's not just about price. The whole notion of selling the business is about making sure it's sellable.
First step.
Okay. Once we've made it sellable, then we can start looking into the marketplace for what the price could be.
Exactly.
And then we can work on building. Exactly.
Because what you start with price is good. It's a good place to start with price, but what we find is a very hard thing to establish. Yeah. Because as I showed you, there's only 2 numbers: a profit and a multiple. Yeah. I can make the price higher by changing the multiples. Yeah. Assuming you don't change the profit. That's right. Right. So what is 5 times versus 3 times or 4 times, or even pivot versus EBIT? Yeah. And there's a huge misconception out there that we find a lot of business owners. Yeah. Tends to be given all this information thinking that they know what the value of the business is. Which my first step is always, let's step back and see, is it sellable? Right. There's not much point if it's not sellable. So really, it's all about this sellability score. So I see the website is here, so people can jump online. And so, what's the cost of doing this sellability score? Look, we are offering this as a service to our clients, and people like yourself refer your clients based through us. Yes. Who can actually have a chance to do it themselves. Okay. And it's complimentary.
So there's no charge to do
We
the
don't
sellable
charge for
discount?
that because what we do is it actually saves us a lot of time.
Ah, okay, okay, I understand. So what you're doing is you're asking people if they're interested in finding out how sellable their business is, they can jump online, they do the diagnostic tool.
And then we'll go through a report. We'll go through and generate a report and give them a copy of the report free.
Okay.
And if they so wished, we're even happy to discuss with them where they are.
Okay.
And then they can make some informed decision on what to do next.
Right. Okay. So it's really about pre-educating a business owner on what the current status of their business is before they start trying to sell.
Exactly, because selling is a long process. It's not
Right.
just that. A lot of time when you start the process with "I'm selling now,"
Yes.
you are looking at putting emotional effort into it.
Yes.
You are looking at putting financial investment into it, like marketing and sales.
Okay.
You are having business disruption.
Yeah.
And what do you tell the employees? Am I going to tell them the truth I'm selling, or am I going to hold them back? And this is strain on the owner all the time.
Yeah. Makes sense.
But where else the question is actually started should be: is it sellable? Because if once we know the score, it's something they can work on if they got time.
Yep.
Or something they can expect as a result, in the sense that when some offer come in, they'll know it's a good offer or not, because
right. Okay.
it's not. It's very hard with some not with based on emotional decision or based on a number that someone generate by a multiple, as I show you. We can generate any numbers you like. It's just at the end of the day, like I said before, always come down to someone going to hand over the cash.
Yep.
Sign a dotted line, hand over the cash.
That
That
makes
is
sense.
success as outcome.
Okay. Okay. So really, this service is really just to help educate people in business.
We see that as very, very much needed, and it's one easy, non-intrusive way.
Yep.
And the owner can just do it without, they can do it at home over a cup of coffee or tea.
Yep. Takes
Drink.
about 15 minutes online.
About 15 online, and then once we do it, we look at it, and then we would generate a report for them and give them copy back. If they want to discuss about it, we have the skill set and also expertise to provide specific input.
Fantastic.
And then obviously, people like yourself will be able to help your clients to do, if they need to be working on it for longer term to improve it. There's always a chance to improve it after that.
Fantastic. That's been very valuable today. Thank you very much, Choon, for coming in today and having this discussion. Look, if anyone has any questions, what's the best way that they can get in touch with you? Is there a way to get in touch with you through this website as well?
There is. You can go through the website itself. You do the actual score, or through our. For those who might be interested, I can give you a slide deck which we have used.
Yep.
And that will include our contact details.
Great. Well, what I'll actually be doing is we are recording this webinar,
Okay,
so I'll be able to post it out to everyone who's attended today. If anyone's got any further questions, they can contact you directly, or they can contact through our office as well.
I mean, one thing we learned in the way we in this selling sellability itself, or selling a business, we know most business owners are quite focused, or quite there's a demand to be confidential, right, in what we do.
Yep.
And we have that process in place, which is why we don't run as a big come as you see who's selling, who's not selling type event.
Yeah.
But more a one-to-one. A lot of the service we offer could be one-to-one, which is why we have to put the time in to deal with that.
Yeah, because obviously, like from what you've described today, there's so many different ways to value a business, and there's so many intricacies to establishing how to improve the value of that business.
Exactly.
So look, that's been very useful. I just wanted to thank you very much for your time today, Choon.
Thanks for having me here. It's a pleasure.
It's a pleasure, and look forward to some success in the future.
Oh, look, I hope the clients, they get prepared, the better they'll get an outcome for themselves.
Yeah,
that's all I say. Thank you for that.
Wonderful. Thanks again.